Good morning, sir. Welcome to the show. I mean, since we are talking about the earnings, what are your broader expectations about, from Reliance Industries this time around? A steady quarter is expected?
Yeah, definitely steady quarter is expected. Look, I think the Singapore GRM have moved up significantly, and GRMs should be up. So the oil and gas vertical should do definitely significantly better than what we had seen in the last few quarters, and that should propel Reliance earnings. Petchem will remain subdued, and that's pretty much because of what's happening in the global market as far as the prices of petchem products. So petchem subdued, oil and gas definitely significantly positive. We expect the telecom, that geo platforms, that piece also to do well. That will be contributed by incremental subscriber addition as well as ARPU, mild ARPU increase. Retail, of course, because of the significant increase in the footprint, the volumes will be higher. We understand that the same store sales also are increasing. That should help. So overall, we believe that Reliance results should be much better compared to what we've seen in last couple of quarters. The only point which probably will be soft segment, which will be soft, will be petchem. The other important thing, which as far as the result on the subsequent management commentary we will be watching out for, is the green energy plan deployment, and they talked about 75,000 crore deployment for green energy and things like that. We need to get a little more granular details on that, and we'll wait for that.
Also, Mr. Bandyopadhyay, what's your outlook on the stock? Has been range bound for the last, 2 years or so, and year to date, the stock is down around 12%, almost 21-22% off its 52 weeks high. What's the outlook on Reliance Industries?
Well, if somebody is a long-term investor, they should just pick up this stock and keep it in their portfolio. That's been my view for some time, and it remains the same. I think there are multiple value unlocking levers sitting inside today's Reliance Industries. There is geo platforms, there is retail, there is green energy at some stage. All these are potential value unlocking opportunities. Whether that will happen in this fiscal, next fiscal, or the fiscal after that is little difficult to predict. But overall, I think there is significant value unlocking opportunity. So investors should buy into that. Overall, performance-wise, also, I think it deserves a much better valuation. My guess, without even value unlocking, a price around 3,000 is a fair value for Reliance. So it's quoting below our fair value estimate, and definitely a good buy from an investor's point of view.
Good morning, Mr. Bandyopadhyay. Coming to Maruti, it's expected to post net profits jump of almost 42% according to analysts. Do you think it is because of the new product mix that they have forayed into, gone back into the off-roader segment also? Is that the case? And what are your views on the Maruti stock going forward?
Well, a couple of things. I think you are right to that extent that the SUV segment pickup is probably will be responsible for a much better than expected performance as far as Maruti is concerned. But by and large, I would credit the input cost prices reduction for a significant part of the incremental profit, quarter on quarter and year on year incremental profit, which Maruti will clock. I think we have seen significant, softening of commodity prices, and that has been helping Maruti to propose better than expected results. Also, I would say at current levels, post whatever is happening in the market, it does look attractive at a current valuation. From a long-term investor's point of view, Maruti continues to remain the largest automobile company in India. And, yes, there were challenges in the SUV segment, which they were facing because SUV was the fastest growing segment and they were not strong enough in SUV segment. Now with SUV segment pickup, they coming up with new vehicles which are doing well. I think things should start changing and changing pretty fast as far as Maruti is concerned.
All right. We also have, PM Modi inaugurating the 7th edition of India Mobile Congress. I think the visuals are coming in now. Mr. Bandyopadhyay, we'll get to you very soon. As you can see, the inauguration ceremony is going on.
जी शैलेंद्र, और जो इको सिस्टम है वो हम मान सकते हैं करीब अब 27 से 29 अक्टूबर के बीच जो इसका आयोजन हो रहा है इंडियन मोबाइल कांग्रेस का, उसकी झलक हमें यहाँ देखने को मिलेगी। फिलहाल हम तस्वीरें भी अपने दर्शकों को दिखा रहे हैं। प्रधानमंत्री नरेंद्र मोदी जब यहाँ पहुंचे थे, प्रदर्शनी का उन्होंने उद्घाटन किया, अवलोकन किया, और उसके बाद वहाँ जानकारी लेते हुए जो भारत के अलग अलग प्रमुख नेटवर्क प्रदाता हैं, मोबाइल नेटवर्क प्रदाता, उनसे उन्होंने मुलाकात की। साथ ही जो नई तकनीक आ रही है उसके बारे में जानकारी लेते हुए नजर आ रहे हैं प्रधानमंत्री नरेंद्र मोदी, और अब से कुछ देर बाद संबोधित भी करेंगे। लेकिन अपने आप में शैलेंद्र काफी महत्वपूर्ण कि जो इकोसिस्टम था पहले शायद उसकी कमी रहती थी, फिर चाहे एक हम सेमीकंडक्टर की बात कहें या
As you can see on your screen, the PM is in conversation with Mr. Sunil Bharti Mittal.
इकोसिस्टम जो है अब एक ऐसा प्लेटफॉर्म जो है वो तैयार करके दिया जा रहा है जिससे तमाम अवसर जो हैं वो अब जल्दी से हमारे पास हो सकें।
निश्चित तौर पर देखिए किसी तकनीक के
Now, Mr. Bandyopadhyay, we have seen a good bit of a bounce back come in the markets. I think Nifty has rescaled that 19,000 levels. But I mean, can we really trust this bounce back given that the situation from an economic standpoint and geopolitical standpoint is only, at least in the very near term, seems to be getting worse?
I agree with you. I think, there are positive factors and there are negative factors. If I talk about the positive factors, I think fundamentally and macroeconomically, nothing has changed in India. As far as Indian figures are concerned, as far as Indian macro data is concerned, I think it's all good. The challenges come from the global front. Yes, I think the geopolitical tension obviously is the biggest worry with what's happening in Israel, Palestine, as well as some remote corner of Ukraine, because now that has become remote, has been leading to a lot of risk aversion. And there is a valid reason for risk aversion. Point number one, I think US bond yields rising to the levels, unprecedented levels, and of course the global crude oil prices going up. Now, crude oil prices directly impact India, and if it continues to sustain at a level above 90, I think it doesn't augur well for Indian economy as well as the capital market. So we need to be cognizant of that and be a little cautious as far as capital market exposure is concerned. We have, of course, been seeing a lot of risk aversion related trades from global investors, and that has led to major selling off in the Indian markets. But having said that, I would say that, as you rightly said, near term choppy, but medium to long term, we believe that Indian market has inherent strength, that once we cross over this hump, Indian markets will resume its positive trajectory.
Mr. Bandyopadhyay, keeping to the geopolitics and the hump that you spoke about, do you think it is going to escalate further with news of fresh strikes in Syria by US, which are not coordinated with what Israel is doing in Gaza? Do you think that is going to add to the volatility and the hump that we spoke about in the markets, and should investors brace for it right now?
Well, investors in the market should definitely brace for escalation of tensions. But I'll tell you something, of course, I'm not a geopolitical expert, and my limited knowledge and limited views are only what I'm sharing here. Globally, if you look at tensions and this kind of flare-ups around the world over 30, 40, 50 years, they increase, they flare up, and at some point of time, within a short span of time, they start cooling off. And better sense prevails. So I would hope and pray that better sense prevails soon and things start cooling off. It is in nobody's interest to escalate this beyond a point. And I'm pretty confident that things will, I think in a matter of a fortnight's time, that's my guess, start cooling off.
All right, keeping with the global markets now, Mr. Bandyopadhyay, it seems that US market is working on this theme that good news is now bad news. I mean, even on Thursday, the Q3 GDP print that came out was ahead of expectations, yet the markets saw a heavy beating on Thursday. Now, this is it because of this higher for longer narrative that's which is adding to the pain?
Definitely. I think, this is the challenge as far as US economy and US, Fed is concerned. Economy is pretty robust. And in spite of the interest rates reaching all-time high and the narrative around higher for longer, we have seen the job numbers are to an extent resilient. The GDP numbers are coming pretty strong. And, this is definitely a completely different scenario vis-a-vis Europe. Now, Europe is on the verge of a negative growth or a very, very limited growth in most geographies. The largest economy in Europe, Germany, is definitely staring at a negative growth. Whereas US, I think, even under all these pressures and pulls, is going to clock a positive GDP growth of between 1 and 2%. I think that is commendable. But on the other hand, that does put pressure on US Fed as far as inflation trajectory is concerned, and this leads to the fear that it will be higher for longer. And if it is higher for longer, I think the capital markets will have to be cautious, because the risk of doing trade in emerging markets and in equities will probably not be as attractive as a government security GSEC yield. And that is what people are worried about. And that's why we have been seeing sell-off in high beta stocks and high beta markets, which of course India is, if you look at it from a US investor's point of view.
Now, talking about US investors, foreign institutional investors have net pulled out, nearly $1 billion from the cash segment yesterday alone. Now, the net short position in the market is currently, I think, around 89 to 90% or so. And I think this is the first time in a very long time that the sentiment coming from FIIs is this negative. I mean, and looking at the factors, all of these factors that are at play, as you also mentioned, seems to be, global. Are there any India-specific factors that are spooking FIIs at this point in time?
Well, definitely. I think the only India-specific factor is crude oil price, and that's to a great extent dependent on how this geopolitical crisis evolves. India is one of the largest importers of crude oil, and oil prices going up definitely hurts Indian economy and pretty much the Indian capital markets. So global investors of course are cognizant of that, and they will be watching the scenario very, very carefully. I think beyond crude oil, India doesn't get impacted even indirectly because of this conflict. As such, the impact is of crude oil prices, and we have to be a little careful about that.
All right, that's the view coming in from Mr. Bandyopadhyay. Mr. Bandyopadhyay, always a pleasure speaking to you, sir. Thank you for joining us on News 9.